SoFi has pulled back massively in after hours. Let's talk about where this stock could be headed very soon and what's going on currently with the price. Make sure to watch to the very end of this video so you don't miss any of my analysis on SoFi, and make sure to hit the link down in the description below for Public if you guys want to sign up for Public and get one free stock when you use our link. Not only does it support the channel, but it also allows you to get a free stock from a great selection of companies and join a social investing network that allows you to join up and follow some of your favorite investors and keep up to date with what they're buying, what they're selling, and what their thoughts are with the current market. But other than that, guys, let's get right into this video. Alrighty guys, here we are with SoFi Technology sitting about $17.46 a share, up just about 0.57 cents on the day, 3.37%. But the thing is, this graph unfortunately is not accurate. Actually, as of right now, it's not displaying after hours trading information. If we go to TradingView, this is what we're looking at here. Significant pullback all the way down to now $15.84 a share. And there's a lot of questions, there's a lot of speculation, there's a lot going on with this right now. Why did SoFi pull back so heavily? We're on a beautiful upward trend here leading up to, well, you can guess it, earnings, right? We're up at earnings. So as you can see here, SoFi stock falls after its first earnings report as profit outlook comes up short. So let's read into this. I'll give some of my opinions, my thoughts, and we can kind of just get an overall understanding of what's going on with SoFi and why did it drop back significantly like it did. SoFi Technologies Inc. doubled revenue in its latest quarter, but issued an earnings outlook for the current period that came up lighter than what analysts were anticipating. The company reported a second quarter net loss of $165.3 million or 48 cents a share, whereas it recorded net income of $7.8 million a year earlier. Analysts tracked by FactSet were anticipating a 6-cent loss per share. SoFi 3.31% up. Revenue rose to $231.3 million from $115 million, while analysts were expecting $218.6 million. So that is good. Revenue they did beat. Shares of SoFi were off more than 12% in after hours trading Thursday following the report, which was SoFi's first since going public in June through a merger with a special purpose acquisition company. The company's total member base grew to 2.6 million, up from 1.2 million a year earlier, while total products reached 3.7 million, up from 1.6 million a year ago. Both growth figures reflected expansion in SoFi's product offerings, the company said in its earnings report. Looking ahead to the third quarter, SoFi expects adjustments net revenue of $245 million to $255 million. It also expects earnings before interest, taxes, depreciation, and amortization in the range of about $7 million loss to $3 million in earnings. Analysts tracked by FactSet were expected positive EBITDA or EBIT. I'm so sorry. I had people roast me in the comments about mispronouncing this, so I'm just going to say the letters. I'm so sorry. I'll learn how to pronounce it by the next video, I promise. EBITDA of $11.8 million. In the latest quarter, SoFi generated total net revenue of $166.3 million in its lending business, up from $95.9 million a year prior. It saw 981,440 product or originations in the lending business, including 18,102 home loans, 544 and 68 personal loans, and 419,270 student loans. The company's financial services segment recorded 17 million in revenue, up from 2.4 million a year earlier. The segment saw directly attributable expenses of 41.8 million, which brought the contribution loss to 24.7 million. A year earlier, SoFi recognized directly attributing expenses of 33.3 million that brought the contribution loss to 30.9 million. So just to sum this all up, SoFi saw its growth in the technology business. Jesus, I'm sorry guys, which mainly consists of the Galileo Financial Technologies operations that it acquired in May 2020. Galileo provides services to neobanks. It had 78.9 million accounts as of the second quarter, up 36 million a year prior. Revenue from this segment is increased to 45.3 million from 19 million. The company noted that it has engaged its heavy investments to migrate the technology operations to the cloud, expand geographically, and nearly double headcount for the part of its business. So what does this mean? Why did SoFi kind of crater the way it did in after hours? Well, obviously the profit outlook came up a little bit short. So analysts were expecting a much better profit outlook overall for SoFi. And of course, SoFi unfortunately did not deliver exactly what they were expecting. The numbers weren't necessarily bad. I mean, they're still not great, but they weren't They weren't terrible. And this brings me to my point about SoFi, is that this is a long-term growth stock that I've always looked at for the past like couple of months now, that I'm very bullish on. And I think fundamentally this company, what they're doing is great, and they continue to expand and continue to grow at such just a fast rate that even though they did miss a little bit on profits, you have to remember that just because an earnings report has a few minor details that come out a little bit short maybe to analyst expectations, or even just a little bit in the wrong way that they should be, does not mean that the company is now inherently less valuable than it was a day prior. Earnings are risky. Earnings always tend to go one way, they tend to go the other way, they go all over the place. There is no way really to tell sometimes how an earnings report will affect a stock's price. Usually people who play options on these types of plays, they get burned. Even if the earnings report is amazing, sometimes the stock price can totally go the other way. So again, am I not buying SoFi at these levels? I actually want to buy SoFi at these levels. If we pull up some technical analysis stuff here with TradingView, this is what we were looking at with the RSI. And again, we'll have to pull it to a wider time frame here, but this is where we're at right now. It was super low here in after hours. And even though you can't really do much trading after hours, if we pull back to the 3-month here, we are officially in oversold territory. We're bouncing back a little bit here, and that's likely due to a lot of people having fill orders or just overall orders down here that are buying up shares. But again, I love buying stocks when the RSI is below 30. It's always a great way for myself to figure out where a good entry point is on a stock that's probably oversold and relatively undervalued. And again, SoFi was on a beautiful run up before this earnings report, and I think that this is a little bit of an overreaction in my opinion. Again, I don't think that SoFi is now inherently worth less as a company. I don't think that they're really bad in any sense of the word. I still really like SoFi, and I'm waiting, of course, for it to bounce further up back into these higher ranges that it was trading at just a little bit before, in the 20s to kind of high 20s, mid 20 area, right around here. And you have to still remember that there are plenty of price targets by the end of the year for this stock at $27 to $28, and we're currently sitting at 17. It's obviously going to be lower now. Public hasn't updated it yet, but overall, I'm still very bullish on this stock, and I'm still going to be waiting patiently for the valuation to bounce back and make sense. Now, it'll be interesting to see how the trading day will open up tomorrow. RSI is very low right now, so I wouldn't be surprised if we opened green tomorrow. Now, if it doesn't open green tomorrow and it starts to go lower, I'm going to be keeping a close eye on the 3-month to 6-month chart on a wider time scale, like a 180-day chart, and looking for that RSI to bounce below this 30 level, and then I'm going to be looking to pick up some shares probably. Again, this is not financial advice. We do not give financial advice. These videos are for education and entertainment purposes only. We don't give any recommendations or investment advice, so please do your own research. This is what I'm doing. Do not do what I do. You do what you do. Just to let you know. But that's what I'm looking at right now in SoFi. I'm still incredibly bullish on the stock, and I'm still looking forward to its overall growth and expansion in this industry. But other than that, guys, that is pretty much it for SoFi. Make sure to like the video, subscribe if you're new, hit the notification bell so you never miss a new video like this. If you guys want to pick up a free stock with Public, check out our link down in the description below. When you guys sign up for Public, not only do you get a great investing social network that you can be a part of, you also can get a free stock, and of course you can follow some of your favorite investors on there, keep up to date with what they're buying, what they're selling, and of course their current thoughts on the market. But other than that, guys, that is all I have for you guys today. I'm Kyle with Finance Bro. Take it easy.